Good afternoon, everyone, and welcome back to Finwell Daily Brief. It's Tuesday, March 25th, 2025.
Yeah.
And this is...
Seventh one.
Yeah, our seventh briefing, and we're going to keep this one nice and tight today. Focused on what happened as the markets wrapped up just a little while ago at 3:30 p.m. Indian time.
Yeah.
As always, right? We're here to sift through all the financial news and try to give you, the listener, the most important bits and pieces, the things that really matter, so that you can stay on top of things, stay informed without feeling like you're drowning in data, right?
Right.
So, before we actually jump into the numbers, I was just looking at some interesting information from the Reserve Bank of India, the RBI.
Okay.
They pointed out that only about 5% of the total savings that Indian households hold, all their money, only about 5% is actually in equities. That's it.
That's tiny.
It's really small, which, got me thinking about where the heck is everyone else putting their money, right?
Yeah.
If it's not in stocks, where's it going?
And for you listening, think about it. Think about your own portfolio. Is it more in those traditional ways of saving money, or are you in that small 5% that's venturing into equities?
Yeah.
There's a big difference, right, in the long run in terms of wealth creation, potentially.
Absolutely. Yeah. Food for thought. Okay, so let's get into what happened today. The Nifty 50, the big guy, closed today at 23,668.65.
Okay.
And it did go up a little bit, but we're talking a really small step, like 10.3 points. It's 0.044% gain.
Right, so basically flat.
Yeah, pretty much flat. Hardly even a blip, really.
Right, and that's what's interesting. So when you go beyond those top 50 companies, you look at the Nifty Mid-Cap 150, that's a different story, a bit of a pullback. It closed at 19,228.35. That's down 189.95 points. So that's almost a full percentage point. So it's like, okay, something's going on there. Why is there a bit more caution, perhaps, with these mid-sized companies?
That's a good question, and that trend continues, right? You look even further down the line at those smaller companies, the Nifty Small Cap 250, they closed at 15,184.45. And they actually took an even bigger hit, down to 207.95 points. That's like 1.35%.
Yeah, bigger hit.
Yeah. So those bigger companies sort of just, stood still, but the mid-size and the smaller ones definitely feeling a bit more pressure today. It makes you wonder if there's like a shift happening, like, under the surface in how investors are feeling.
Yeah, like some undercurrents there. And you know what? To really get a feel for the whole market, that Nifty Total Market Index, that's a much wider range of stocks, that also declined. It ended the day at 12,046.40, down 64.95 points. So that's 0.54%. So, even though that Nifty 50 was sort of flat, this broader index is saying, hey, maybe there is a bit more caution in the market today. Maybe people are, sticking with those big solid companies right now.
Right, makes sense. Okay, so let's switch gears just a little bit and talk about fixed income. The 10-year government bond, right? That yield was at 6.63% yesterday, March 24th.
Okay.
Which is, something to keep in mind because it sort of sets the bar, right? It tells us, what other investments need to deliver in terms of returns. And it also impacts how much it costs to borrow money in the whole economy.
Right, sets the tone. But, I think one of the biggest surprises today, a good one, was the Indian rupee. Doing pretty well against the U.S. dollar. It closed at 85.6350. That's a nice little jump, like 0.4% up. What's remarkable is that's enough to wipe out all the losses it had this year.
Wow.
It's like all of a sudden it's back on track.
That's a quick turnaround.
Yeah, so what's driving that? Well, it seems like foreign banks have been selling off their dollars. And why would they do that? Maybe they're locking in profits. Maybe they're shifting their investments, showing a bit more confidence in holding rupee assets. And then, the other big thing is the continuing flow of foreign investment into India. That's a huge vote of confidence from international players. And it's definitely a bright spot.
Yeah, absolutely. Okay, so let's dig into some of the big news stories that were probably influencing all this market action today. The RBI, they had that auction of $10 billion in foreign exchange swaps.
Yeah, that was a big one. And it got a lot of attention, didn't it?
Yeah, it did.
Over 2 times oversubscribed.
Wow.
Yeah. The demand from banks was huge. The cutoff rate was 5.86 rupees.
Yeah.
And so, what does that actually mean, this whole swap thing? Think of it like this. The RBI is basically lending dollars to banks right now, and they'll buy them back later at a set price. So the big demand means banks are really eager to get their hands on those dollars, maybe to cover their own needs or maybe to, take advantage of some opportunities. And the fact that it was so oversubscribed, that shows that the banks are pretty confident, right? They believe they can actually use this money well.
Right.
It's all about the RBI making sure there's enough dollars available for everyone in the banking system. It's like making sure the engine's got enough fuel.
Yeah, keeping things running smoothly. And then we also saw those foreign portfolio investors, those FPIs, they're back as net buyers,
Yeah.
which is good news, right?
Yeah, definitely. And it looks like they're especially focused on the big financial stocks, the heavy hitters. That's probably part of the reason why the Nifty 50 managed to stay in the green today, even if it was just barely. And when you zoom out, it seems like this comeback of foreign investment is driven by those positive economic reports we've been seeing. Things like inflation cooling down and industrial production exceeding expectations.
Right.
These are the factors that make India look attractive to international investors.
So good news on the home front is attracting money from overseas. But we do have those U.S. tariffs looming, right?
Yeah, those are definitely on people's minds. Everyone's watching closely to see what happens when they kick in, supposedly on April 2nd. Now, these are external factors, right? But the reality is everything's so interconnected these days. Trade policies like that, they can definitely have a ripple effect, create uncertainty in markets all over the world, including India. It reminds us that, we can't just look at our own market in isolation.
Right, big picture. Okay, so putting it all together, that tiny little gain in the Nifty 50, the dip in the mid and small caps, the rupee gaining strength, what the RBI is doing, FPI is coming back, those tariffs on the horizon. What's your takeaway? What's the message for our listeners about where things stand right now?
It's a mixed bag, right? Those top-tier stocks, they're holding steady, but there's definitely a sense of caution, especially when you look at the mid and small cap segments. The rupee's doing well, foreign investors are coming back, that's positive, it shows confidence in India's economy. But those tariffs, they're like a cloud hanging over things. So, being cautious in the short term makes sense. The good thing is the momentum from those positive factors inside India, that's strong, but those external risks, those could definitely still shake things up.
Right, okay. So let's zoom in a bit on some specific sectors. You mentioned those financial heavyweights. They're getting a lot of attention from those foreign investors.
Yeah, and that strong performance, it suggests that this sector is pretty healthy right now. Definitely worth watching. Are those investments going to keep flowing in? What's driving that interest? Those are the questions to think about.
Okay. And what about manufacturing? We've been hearing a lot about the government trying to boost that sector domestically.
Yeah, and what's particularly interesting is their focus on defense manufacturing. That has the potential to create some real growth for companies in that space. For you, the listener, that means keeping an eye on what the government's doing, watching the companies involved in defense and broader manufacturing. Are they winning new contracts? Are they increasing production? Those are the things to look for.
Okay, makes sense. And technology, that's been such a big driver globally.
Yeah, the IT sector, they're still benefiting from that global push towards, everything digital. The key here is finding the companies that are really innovating, the ones that can keep up with the changes, the companies that are helping other businesses go digital. Those are the ones that are probably going to do well.
Okay. Now, let's talk about some of the bigger investment themes that seem to be playing out right now. Domestic consumption, that one always feels pretty close to home, right?
Absolutely. India's middle class is growing. People have more disposable income, and that means more spending on all sorts of things.
Right.
This is a long-term trend, and it's impacting tons of sectors, from basic necessities to, those little luxuries. And as the listener, you can actually see this happening around you, right? Think about what you're buying. Think about the brands that are becoming popular. Those are clues to potential investment opportunities. Yeah.
That's interesting. Okay, infrastructure development, that's another big focus area for India, right?
Yeah, definitely. The government's really pushing to improve and expand things like roads, railways, ports, energy, all that. That creates lots of opportunities for companies in construction, engineering, all the related fields. These are usually big projects, long-term stuff that can really boost the economy.
Right, it's like a domino effect.
Exactly.
Okay, and then there's that global shift towards green energy and sustainability.
Yeah, that's picking up speed in India too. More clean energy, electric vehicles, companies that are taking that ESG stuff seriously, the environmental, social, and governance factors.
Yeah.
And this isn't just about doing the right thing. It's actually becoming a smart investment strategy.
Right.
Yeah.
Okay, so a lot for our listeners to consider there. Now, we always got to talk about risk management, right? What are some of the strategies you would recommend to our listeners, to help them navigate all of this?
Diversification.
Yeah.
Basic, right, but so important. Don't put all your eggs in one basket.
Yeah.
Spread your investments across different sectors, different types of assets. That helps protect you if one of your investments doesn't do so well.
Right. Cushions the blow.
Exactly. And, in today's world, you got to stay informed globally, too.
Yeah, absolutely.
Keep an eye on things like those U.S. trade policies we talked about, what's happening geopolitically, economic trends around the world. It all matters because it can impact your investments.
Right. And we got to think about liquidity too, right? Especially with the RBI doing its thing.
Yeah, especially with fixed income, bonds and stuff. How easy is it to buy or sell without impacting the price too much? That matters, especially when things are volatile or policies are changing.
Okay, so wrapping it all up, what are the key takeaways? What do you want our listeners to remember from today's briefing?
So, Indian market today, a bit of a mixed bag. Large caps steady, mid and small caps a bit shaky. The rupee's strong, foreign investors are coming back, that's good. But those U.S. tariffs, they're a risk factor. So stay informed, both here and globally. Keep your portfolio diversified and focus on those long-term goals.
Excellent summary. And that brings us to the end of today's FinWell Daily Brief. If you want these concise, insightful updates every day, make sure you hit that subscribe button.
Yeah, and if you've got questions, if you want to dig deeper into any of this, reach out to us on LinkedIn, SOS FinWell. We're always happy to chat and share more insights.
Absolutely. And don't forget to subscribe so you don't miss tomorrow's briefing. And we'll leave you with a thought from the great investor Philip Fisher, who said, "The stock market is filled with individuals who know the price of everything, but the value of nothing." It's a powerful reminder to always look beyond the surface and understand the true worth of your investments. Thanks for listening.
Yeah, thanks everyone.
We'll see you next time.